Hello, hello, hello. Test, test, test. All right, audio's good. We'll get started here in a minute. Daily discussion 5-1. Made it to May. It's gonna be May. Dude, I've seen that meme every year for like the last decade, and that shit still cracks me up. Okie doke. How's everyone doing? Hopefully you survived the volatility at the monthly close, the days leading into the monthly close with all of that Mount Gox silliness. Essentially, what happened was this whole thing. In case you missed it, and you're like, "What the hell happened?" This whole thing right here was caused by a false alarm. By I guess it was. If I had to guess, it was probably a malicious thing that happened. It was like basically a false alarm that some of the OG coins and Mount Gox coins and stuff like that started moving, and I think bots probably monitor those alerts. And so right when this like false alarm happened, this turbo nuke happened, which was like an instant, well not instant, but pretty freaking close to it. 9% drop, right? I guess from the top, 9.5% drop. That happened over the course of an hour or something like that. Yeah. We look at it on the hourly, it was pretty aggressive. And then, of course, the market climbed back up, and now it's kind of just doing God knows what, right? So we're going to get into it. So when we look at the monthly now, because today's the 1st of May, it's now appropriate to check out the monthly candles, right? So monthly chart says not a whole lot, actually. I do have this zone outlined here, and it did close a marginally lower low. Nothing that I would feel confident being like, yes, this was a decisive close back inside the range. And when I say range, I mean this fella is the range, right? Did it decisively close in there? I don't know. It really depends on how you draw your zone, which can be drawn a number of different ways. This thing could be drawn like this, arguably. And then if that's the case, well, then did it close in there? No. So it really just depends on how liberal you want to draw or how liberally you want to draw your zone. Yeah, it's kind of just beauty is in the eye of the beholder, right? So kind of just depends on how you want to look at it. I prefer to be more. I prefer personally to have wider zones so that I know my confidence level is higher if it breaks it. The thinner you make your zone, the weaker the signal, in my opinion. So, yeah, it really just depends. Well, when we look at the weekly candles, when we look at the B bands, like, are they squeezing? Yes. Did they start expanding? Not really. And when I say not really, we can look at the percent B. I'm sorry, the BBW. We can see quite clearly we don't see this upward slope, like something like this, for example, that represents B band expansion. So this downward move objectively has no momentum behind it. Could it gain momentum by closing on this lower band? Yes. Has it closed there? No. So what does that tell us? That tells us, to me, we're still sitting at monthly support, right? And until we break this support or we bounce, Bitcoin's going to be volatile AF. And so are equities and all kinds of other stuff. So what I'm looking for is the same thing I've been looking for weeks. I'm looking for a weekly close on this lower B band, and ideally a decisive close. It did close below the monthly midline. I'm just now seeing that. So that's good. Like that's a check in the bear column. And once again, if you're bullish everything else, you want to be bearish the dollar. So when I say the bear column, I mean Dixie bear, which makes everything else bull, right? So let's go ahead and tally some of this stuff up. So we'll look at monthly. April candle closed below the B-band's midline. This is a check in the bear column for Dixie. Remember, Dixie bear equals everything else bull. Everything else bull. And for those who are new to the stream or anything like that, pop over to my Discord if you want these notes. As I do my stream, throughout my stream, I kind of just collect a long list of notes summarizing in real time what I was talking about, and just kind of give my thoughts on some of the stuff. And if you want that, so you don't have to write this down yourself, go ahead and hop over to my Discord here. Blam. There's your link, and you can just find it there. So you don't, you can just sit back and watch the stream and not have to actually write down the notes. All right, so what else do we want to say? One could argue that we closed below the multi-decade zone. And the multi-decade zone is this stuff right here. You see this very clear band of prices. And one could argue we did. Did we decisively? I would err on the side of caution and say no, we didn't. Not yet. So one could argue that we closed below the monthly decade zone of support. However, I would personally, what do I want to say? I would personally, let's say this. One could argue that we closed below the multi-decade zone of support. Okay. However, zones are areas, let's say this, areas of interpretation, and can be drawn many different ways. This was not a decisive close below the zone, and I would personally like to see a monthly close a little bit lower. Let's say that. Monthly close a little bit lower. Cool. Moving on to the weekly. Weekly, it is trending down, of course. The cloud metrics say down. If we get rid of all this stuff, look at the cloud. The weekly says down, right? Like it's very clearly down. We've got a bearish Kijun. Bearish Kumo. Kijun is slowly slipping through the cloud. Price is below the cloud. It's below all this stuff. To be a decisively, objectively bearish trend by cloud metrics, we at least want to see the Kijun through the cloud. And that's just going to be a matter of time before that happens, right? Unless this thing really bounces. This thing, every weekly close, is just going to keep pulling the Kijun down. But if we look at like this, for example, right, we see here how the Kijun and Tenkan are through the cloud. This is considered an objectively bearish trend, and vice versa. When we see the Tenkan and Kijun above the cloud and the price is above both of those things, that is a bullish trend. So what we're looking for here to really get the party started is to get this Kijun through the cloud, and then maybe a little bit lower close. And once this thing gets started, it's most likely going to target the bottom of the range. I'm personally leaning on that happening. I'm not leaning on the idea that this is going to hold support. The only thing I'm just wary of is this holding support longer than we anticipate, right? I don't like this kind of price action is a good way to really chop people to shreds on other markets. And so rather than trying to front run this decisive break, because once it breaks, it's like, dude, once this thing closes below here, you've got weeks and weeks and months of downward projection to the lower boundary of the range. So for me, I don't want to be exposed to this chop because this is just going to punish all the early bulls and maybe get you offside, maybe tilt you, maybe make you sell, things like that. It's going to confuse you. It's going to make you, question yourself. And so rather than seeing a potential bounce here, I don't think we're going to do something like this where it just runs. Maybe it does, but I just, in my gut, I don't feel that. I don't feel that it's going to run. I think at most it'll just do something like this and hang out in this zone longer than we think and then ultimately snap. The question for me is just when is it going to snap, right? And we can see quite clearly if we fast forward over to the Bitcoin stuff that while we're chilling on that support, we get a volatile series of price act. Like this is hyper volatile, right? It's just zigzagging around. And that's all just because there's not a clear signal that everyone can see, right? So until this thing breaks through, I think we're going to continue to chop city. And if this thing bounces even a little bit, Bitcoin's going to pull back. So what's going to give me higher confidence of a continuation of the downside is closes below this zone. Okay? Okay. So let's go ahead and make some notes. So weekly, the trend, Ichimoku Cloud says bearish trend. What would give us supreme confidence in the bearish trend is let's say this. Ichimoku Cloud says bearish trend. However, the Kijun slow moving average is not through the cloud yet. What would give us supreme confidence in the bearish trend is seeing the price stacked below the Tenkan fast moving average, below the Kijun, and all of that stuff is also below the cloud. Okay? Until then, it could be Chop City, right? When we look at the B bands, again, there's no strong connection to the lower band, thus no trend. Looking at weekly B bands, we see no decisive, or say no strong trend, I'll say, because it's definitely a decisive trend. It's definitely bearish, right? It's just not a strong trend. Looking at the B bands, the weekly B bands, we see no strong trend as there is no attachment, I'll put that in quotations, attachment to the lower band. And just as a refresher, when I say attachment, I mean something like this, where it's like getting consistent closes on the trend, on the band. Here's a bullish variant. Here's the bearish variant. And until that happens, it's not really a strong trend. It's just kind of in no man's land. Attachment to the lower band. Similar to the Ichimoku Cloud, we want to see supreme confidence in the trend. For B bands, that takes the form of B band expansion, attachment to the band. That's really it, right? I guess I'll make this point here. We'll do this. B-band compression prior to breakout. B-band compression prior to breakout. Yeah. Okay, so here's we have two of these things, or we have one of these things. We have our compression. We want to see expansion. And we also want to see the close on the lower band. Okay, so we want to see all three criteria met for confidence in a trend continuation. Okay. Give some more money signs there. Dollar, dollar. Okay. Other than that, there's not much more to say, right? Like this is kind of just mulching over the same shit here that I've been talking about for weeks because it's not doing anything much different. So, but it does help to get constant reminders. Okay. So let's move on to, unless you guys have any questions about this, we'll move on to Bitcoin. Looks like Costco failed the hugging of the B bands. Let me see. Yeah, that's why you wait for candle closes, man. But it is still compressing. Like we're getting the B band contraction, which is great because what that says is the spring is more tightly wound than it was before, and so the bang is going to be bigger in whatever direction it goes. Right. The tighter the compression, the bigger the bang on the expansion. Okay, so let's look at some Bitcoins. Let's look at the monthly chart. So monthly, I hate to tell you, does not look good. It doesn't look good for a couple of reasons. Okay, so one, the most obvious is we're below the cloud. Okay. Two, we have this Kumo twist here. And three, we have this thing, this TK cross that led into this. Until this thing recloses back above the cloud, or at least inside the cloud, this is now considered a bearish trend, right? Just like our Dixie setup on the weekly. Cloud. Oh, hold on. My dog's barking. Mailman. Hold on. BRB. Let me close my door. Sorry. I give her one chance, and then when she barks, she's out. Out of my life. No, just out of the sound room. All right, so what was I saying? So similar to Dixie, we're below the cloud. The cloud is now resistance. Unfortunately, that's what we see on the monthly cloud for Bitcoin. Right? We're now through the cloud. Is it unsalvageable? No, of course not. Is this objectively bearish? If it's not bearish right now, it is definitely leaning that way. I know a lot of people are not wanting to hear that statement, but it is unfortunately a bearish cloud now. There was some hope of it tracing this cloud and finding support up here, but it didn't. And now we're below the cloud, and people are going to be in denial about that. Monthly Ichimoku cloud is now bearish as the April candle closed below the cloud. I should also say this. Take monthly trend with a grain of salt because it is just so volatile. But I do want to point this out here. So if you were around back in the day in 2019, we had this monster rally, and leading prior to the COVID shakeout, we did something similar. So we did something like this, right? So we're here. We had a close below the candle, or I'm sorry, below the cloud. And I'm not saying that we're going to do something like this. That's not what I'm saying. I'm not saying this. All I'm saying is that it does open up the door for more. It's basically just a sign of lacking momentum to the upside on a macro scale. Does that mean we're going to have this like gut checking 40% drop? No, that's not what I'm saying. All I'm saying is that this very clear objective bearish or bullish momentum weakening. That's all I'm saying. Healthy retracement, no biggie. Yeah. Like we should assume something more along those lines. Like assuming something like this happens is probably not the smartest idea. But as Fuzi pointed out, the cloud is now resistance, right? So we project that to current times. Boom. Cloud is now resistance. There is now overhead macro objective resistance right in here. Can I color this? With that coloring inside the lines. Mr. Rodriguez would be so proud. Look at that. This resistance. Close below the cloud. Unfortunately, that means the cloud is now resistance rather than support. Sad face. Looking at the B bands, I was way more optimistic than I am now. When we last streamed on Wednesday, this is before all that stupid shit happened with the Mt. Gox alert. I was really hoping to see a monthly close above this midline. We were set up for it. We were like right here, right within striking distance. And then all that stupid shit happened. And now I'm way less optimistic of this happening. If it does close above the midline, we would look to target the upper band. But until then, this doesn't look the best. Is it possible that it closes back above here? Yeah, it is. But right now, this just kind of looks like not the best. It's objectively bearish is what I'm getting at, right? We got a bearish look on the monthly cloud. We got a bearish look on the monthly B bands. There's not a whole lot of data on crypto behaving this way just because it's only had 1, 2, 3 compressions on a monthly scale. But if we look back at other things that do have more history behind them, the monthly B bands midline is a great waterline check of like support and resistance, right? If it's above, it's considered bullish. If it's below, it's considered bearish. Above, below, right? And this is why we want to see this thing continue to the bottom side of the B band. I should add this actually to the Dixie chart. So April candle. So I'll add this to Dixie. Target equals lower B band. Okay. Going back to Bitcoins. Yeah. We failed to close above the B band's midline. If we somehow manage to close the May candle above the B band's midline, we would target the upper band. Until then, this is objectively bearish. Okay, so let's look at the weekly. Weekly happens a lot faster than monthly. Weekly, this is something that's concerning now. So we always talk about this compression of the B bands giving birth to a new trend. Well, the counterpart to that is rounding of the B bands, and this is evident in our Bollinger Band width. We see this thing rounding here. Whenever we get rounding of the B bands like this, that is typically the sign of the conclusion of an uptrend. Does that mean it now becomes a bear trend? No. Does it mean that we just potentially make a pit stop, consolidate, and move up? Yeah, like that. That's an option. Or maybe we pull back to the midline and bounce, or some variant of that, right? But all that means is that if you're expecting more upside, most likely not going to get it. It's just not in the cards, right? The volatility has dwindled to the upside, and it at minimum needs to consolidate sideways, or at worst correct. And a correction would look like either a retest of the midline or a pull down to wherever the lower band happens to be at the time. So 2 weeklies. What was I saying? Okay, so weekly B bands are now starting to round, thus indicating a loss of upward momentum. At minimum, this indicates the need for consolidation. At worst, that means a correction is on the table. And I'll just make some sub notes here. So, correction targets equals B bands midline. B bands or lower band. And it kind of works like this, right? You would target the B band's midline, be a great reentry, or take profit if you're short or whatever. B band's midline, and if it closes below the midline, we would target the lower band, similar to what Dixie's doing, right? So actually, this is a great example, right? So we go here. If we go, let's go forward one candle. Okay, so here's our flattening B band, right? This tells us the conclusion of our uptrend is very likely, and we would target this midline if we get it. Closing below this midline means we would target the lower band, right? So if we step through time, boom, 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 play it out, hits the midline, there's your take profit. You're out. You then either buy long or you wait for a close below the midline to go short or whatever your plan may be, right? Lower band. Correction. Let's say this. Correction target 1. Correction target 2. Okay. And to be honest with you, I'm personally leaning toward a correction down to here. I've been talking about this for a while now. It's taken a long time to do it. 24K makes a lot of sense. It's the neckline of our Head and Shoulders bottom. It is our now our B band's midline on the weekly. So there's a lot of reasons to expect this. We're running into macro resistance here, so this should not be a surprise. Talked about this for weeks. We've been slamming into this macro resistance here. And in general, it is not a good idea to get long going into resistance. Just like it's not a good idea to short going into support here, right? You long support, you short resistance, or take profit into resistance or whatever your plan is, right? And a couple weeks ago, we saw this big fat bearish engulfing too, so that should have been a pretty big red flag. Weekly. Targeting 24K. Let's say that's 24,000. as a correction target. Targeting as a target, as a correction value, correction level. Makes a lot of sense because that's the neckline of our Head and Shoulders bottom. And it's our first level of support, right? Like you see a very clear, clean, crispy level right here. Very rare we get these crisp levels where they both close. Usually it's a zone. I mean, if you wanted to get like really conservative about it, you could say this is the zone or whatever. But you know, this level is pretty crisp. It's like almost to the dollar. It's pretty rare that happens, but we got it. It's the neckline of our Head and Shoulders bottom, and our only, really, it's our only, or I'll say this, it's our next level of support below our current range. And our range is here, right? This is our range. When we look at the daily, it's very obviously a range. When we drill deeper into our dailies, this starts to take the form of like this Head and Shoulders thing, right? Someone mentioned this in the last stream, and I was kind of poo-pooing it. But I mean, it is not a Head and Shoulders. It's just not the cleanest one that I would want to see. But I mean, it is still there, right? We see our shoulder, head, shoulder. And the target of this thing, let's measure it out, would be 4,200 from the breakout. So let's draw our neckline here. So neckline, bam. So 4,200. 4,200. Deep stab to 23K is the target of this thing. If we are truly bullish, we won't hit this target. Usually what ends up happening is in bullish market environments, we underperform bearish patterns. So, you know, when we had the rising wedge, we underperformed it. When we had, remember rising wedge was here, boom. We underperformed its target. If we are truly bullish, we would not expect this thing to hit its target. And so, again, the 24K is the logical level where we will see buyers. And if you want to be really conservative, we'll say this is our zone here between 24 and 23.7, essentially. So daily, there's a Head and Shoulders top forming with no breakout yet. Because there is no breakout, there's no confirmation. Confirmation would take the form of a daily close. Let's say daily close below this level would get me pretty confident in it. But a daily close below 27.1, daily close below $27,100. Target equals 22.9. Note, if we are truly destined for bullish greatness, we will most likely underperform that target. Once again, we would look for the macro neckline at 24,000 to hold support. I'll also say this, also note, we really don't want to see daily closes below the lower boundary of the neckline zone at 23.7. Closing below the neckline zone would be a strong sign of a head and shoulders bottom breakout failure. Here's your head and shoulders bottom, shoulder, head, shoulder. If this is a failed breakout, we're closing down below here, and that likely means we're going to aggressively hunt liquidity, is what that means. First line of liquidity is here, second line is here and here. So if we close down here, if we do actually hit this head and shoulders top target, I would expect a pretty aggressive stab to first clear this, see how the liquidity is down here. If it bounces, then it bounces. And if this fails, then we would target lower at like 16,000 bucks. But as long as this neckline holds, like, that's good. I'm just laying out the plan so that we know what to expect. Also note. I'll say this. Also note. Head and shoulders bottom breakout failure would immediately hunt. Let's say I'll hedge that statement. Would most likely immediately hunt liquidity in our current formation. The first liquidity level is, what did I say? 19.6. The right shoulder of the head and shoulders bottom. What the hell? That was weird. Yeah. And if that fails, then we're hunting deeper liquidity. But that's it. And keep in mind, these are closes. These are closes. So like I'm not saying if it stabs down to here and bounces, that's what we'd look for. I'm saying if it closes down here, we would look for a continuation down to the liquidity hunt down in here. But a stabbing move that comes here and bounces and closes up here, that's fine. We always wait for the candle closes. Candle closes are really important. Okay. All right. When we look at things like trend metrics for the daily, they're kind of like a sloppy little mess. Like the B bands, I mean, they're kind of just, it's just chop, Cloud, we're back to a TK cross. If we close inside the cloud, we target this edge to edge. But right now, I mean, it's still bullish, but not the most, there's like degrees of bullishness. And this is definitely on, if we're looking at like a scale of 1 to 10, 1 to 10, 10 being the most bullish and this being the least bullish, we're like at an 8 in terms of cloud. It's an 8 because of this and because of this lagging span running into price, but it's still bullish, Yeah. Looking at momentum, not a whole lot to say here. I mean, we have this obvious divergence here, not only in momentum, but in price. I'm sorry, in volume. This is a big-ass daily candle, guys. This is pretty big. When we look at the 4-hour, I posted this on Twitter. Very clear 4-hour trend beginning, right? So if we scroll back to the criteria I gave, right? Here's our checklist. We have compression. We have the sticking to the lower band. We have our B-band expansion. So these are all three criteria. Right, here's another one for the bulls. Compression, sticking to the upper band, expansion of the bands. Right, so it goes both ways. Boom. Expansion, sticking to the lower band. Live by the sword, die by the sword. Okay. I'm not going to make notes in the 4 hour. We'll keep it high time frame on the notes. All right. Any questions about anything that I brought up so far? You were promised alt season? You were promised alt season by me. So we can look at some other stuff. We can look at. Someone brought up Costco. Kind of covered that already. So we got our compression. Now we're just waiting for the expansion and the sticking to the upper or the lower band, right? But this thing's primed. Costco's super, super primed. So number go up? Sure, dude. That was your takeaway. What tool you use more B-band? What? What the hell? You want to look at FTM or sand? If coin closes the way it currently is, it looks ripe for continuation. Let's take a look. So, look at coin first. Coin, yeah, dude, I've been saying this shit for weeks. These lower highs should be really, really worrisome. Anytime you have lower highs and it fails to break structure to the upside, bullish rallies, such as this fella right here, should be viewed with caution. Currently, this thing looks like it's kind of looks like it's wrapping up distribution, honestly. Big expansions to the downside. Volume's not quite there, so maybe it bounces, but closing below here is no bueno. It's currently breaking support. Yeah, it is. If it closes down here, for sure, it looks like it's basically here, right? See the lower highs. Coin volume is weird. Check lower time frame. Like what time frame are you talking? Like 4 hour? Oh, what? The hell's up with that? How does that work? Well, then by this, if this is the accurate, I haven't been trading coin, but if this is actually the accurate thing, then this looks like definitely like it's wrapping up distribution. I was looking for the volume component, and there it is. What the hell's up with that? That's weird. This is NASDAQ? What? Very weird. I mean, B-bands or Ichimoku. What do you think is more reliable and high time frame? I think they're both good. I use both. I just cross-reference them from one another. They both give different targets and different signals, but I use them both for trend. I don't think one is better than the other. They just have different things they're good at. Why do Bloomberg, etc., use line charts instead of candles? Because line charts clean up some of the noise. It's also easier for people who don't know how to read charts to read line go down, line go up, rather than like candle closes chopping all over each other. It's just easier for, you know, mom and pop retail fellas to look at it. I mean, it's also just like it just kind of cleans up the noise. Like if you're looking at, daily time frame and you just slap line chart on here, like it's just all the line plot is just the candle close. So it makes it easier to see like, oh, it closed a new low, right? If you look at this, that corresponds to the close. See? I think it's a TV bug. Yeah, maybe. I don't know. Would you mind looking at UAL? UAL. This one, United Airlines. They've only been publicly traded since 2007. Weird. What? Is that true? Weird. Oh yeah, I was looking at this. I was like, what the hell happened here? But that was coronavirus. So this is. Well, let me look at this a little bit. It's honestly just kind of choppy. Monthly is objectively bearish, but it's just more sideways than anything. I would be reluctant to be bullish on this thing until it closes a weekly. Like if it flipped a weekly support here, it would be bullish. I would be looking for this Adam Eve double bottom to play out. But to be honest with you, I think airlines are going to continue to hurt as long as we have so much unemployment. Our economy is artificially not in a recession, and until all of that gets sorted out, I don't see United Airlines doing well personally. But if you're looking for an objective metric, we would look for a flip of this. Until that happens, I see no reason to be bullish on this. Watching BNTX. Yikes. Okay, watching BNTX. If they can do a range reclaim, looking creaky on the 1 day. Okay, let me see. Yeah. Um, so I would have. Did this make a new high here? I would have liked to see a break of this high here to be more confident in a bullish setup because signs of strength are like the counterparts to signs of weakness, and they should, by definition, break market structure to the upside, just like signs of weakness should break market structure to the downside. So this, I mean, there's a couple of reasons why I would argue this looks more like a redistribution. Look at where all the consolidation takes place up here. It almost always like anytime it dips below the midline, it quickly comes up and it does all its consolidation up here. I mean, yeah, there have been times when things like this did happen and it ended up being bullish. Like silver was as an example where it looked like redistribution. Um, but we don't see the huge expansion of volume to the downside. There's no real big spread. Um, yeah, it could be a good play, especially if we see a high volume, high spread move back inside the range. Yeah. right, what else are you guys watching? What other tickers you looking at? I saw someone else was asking me some other ones. Let me see. Just scrolling up to the chat. Oh, I think I got them all. So I'll go ahead and peruse some of the ones that I'm personally watching. Still watching this guy here, UBS. The monthly. Why is the monthly not open right now? What? Why is there no countdown on this chart? Is it bugged? Weird. Currently at a really good spot. I just want to see it closing weeklies and monthlies up here for a long signal. Looking at gold. Gold, still bullish on gold. It's taking its sweet time in the support. Definitely don't want to see it closing back below here. That wouldn't be very cool. But as long as it's chilling up here, I don't see a problem here, and I'm still looking for the upward breakout. You want to look at Ether? Yeah, let's look at Ether. So Ether, yeah, so last Wednesday I was talking about how sketchy this is another failed breakout. So we had the Adam and Eve, double bottom, failed breakout to the upside that had a giant shittening on it here. And like I was saying about the Head and Shoulders bottom, failed breakout on Bitcoin. Same deal here, right? So I would be looking for this to really target this liquidity level down here, because it trapped so many people on this breakout and immediately dumped on them, and usually that hunts liquidity next. It just drowns them and drowns them and drowns them and forces them to capitulate at like some logical level, which this is the next logical level. Like, yeah, there's a bunch of little levels here, but this is the level to watch. Maybe entering into a Bitcoin short soon. Okay. Good luck, man. I got short last night, and I feel pretty good about it. Stops at break even, so it's like whatever at this point, but I feel pretty good about it continuing to the downside. Can already hear the screen. So okay, so here's the big play that I think could happen for Max Payne with Ether, right? Because we have all these people staking their Ether, but there's like a delay for how long it takes them to unlock their coins. And if we shove price down like aggressively, like I wouldn't expect it to do something like this. I would expect it to, bam, really put the fear of God in the ETH maxis. It would force a lot of people to de-stake their coins, and then it comes down here and then just like turbo sends it from there. Like I could totally see that happening as like a final shakeout. The amazing thing about that is the more they want out, the longer it takes. What do you mean by that? What do you mean by it takes longer? Oh, the more like quantity wise, the more you're unstaking, the longer it takes. Interesting. Okay. Yeah, I don't know much about it, to be honest with you. Right. Because there's a limit. Yeah, there's a limit to how many can outflow. Yeah. So, I was talking about this a couple weeks ago with Josh and Jack on the Market Power Hour, And there was something not exactly like this, but there was something corollary to Bitcoin's past where this is Coinbase. I gotta go back further. We must go deeper. An oldie but a goodie. Oh my god. Sometimes I'll like pull up an old chart and it'll just have freckles all over it, and I don't really know why. But look at this. This is a chart from Christmas past here. This humongous shakeout, which was the capitulation bottom of a classic Wyckoff accumulation trading range. This came about from someone forced selling the market down. And I could see someone doing that to Ether. If you really, really wanted to accumulate Ether, and the thing with Ether right now is if people are staking, that removes supply from the market, right? So it kind of artificially increases demand. So if we're thinking about it like this, right, we have 10 people buying, 10 people selling, price is flat. But if we say 10 people buying and 8 people selling, well, then that artificially increases the demand without actually increasing the amount of buyers. However, if we scare the living shit out of people who have been staked for so long, right? Staking or unstaking becomes available here, pushes up. We have all these people that rode out, like people were staking all throughout here, right? They rode out this whole bear market. They sat there and watched their hard-earned Ether get devalued by 75%, right? What's the very top to the bottom? 80%, right? And if we get an aggressive shove downward, those people who sat there and watched this happen before, guarantee you they're going to be shitting bricks. So I could either see it coming down here, or if you want to get like uber nasty, it would come down here, take out this low, and just full send it. Right? Just like what Bitcoin did. Boom. Blam. And then turbo bull market for decades and decades. Well, not that long, but it's pretty long. 2015 to, this was an epic bull market, bro. This is like it's 2 years. 2-year bull market. It went from $230 to fucking $20,000 before everything was said and done. From the low to the top, it was a 12,500% parabolic return. What I find interesting is the conviction of some of the channels I follow, that crypto is in a new bull market while traditional finance will return to bear. Yeah, that's a pipe dream. If everything else isn't in a bull market, Bitcoin's not going to be in a bull market, right? Whenever I start hearing these kind of narratives, I immediately get skeptical. Because I'm like, is this a euphoric top and we're not even at a top? Because you're just saying crazy shit right now. Like, when has that ever been the case? You just think all of a sudden we're just going to decouple from traditional markets? Like, no, of course not. And especially if, like, let's say, God forbid, Dixie has a big bounce. Like, maybe it does go up here. Or maybe it even just has like a little bit of a bounce like this and makes a new high. Right? If that happens, Ether's going down, Bitcoin's going down. I could easily see something like that happening. And the fact that people are ruling that out, dude, the amount of smug, I don't see it as much this last week or two, but the amount of smug conviction I've seen from people on my Twitter feed over the last month or two that we're in this new parabolic bull market. We're going to 100K, we're going to $1 million Bitcoin. Like, get out of here. Get out of here. Like, do I want that to happen? Yeah, of course. I want that to happen. But if I'm being objective and I'm looking at what the charts are telling me, and I look at even the high level fundamentals of our economy, the world economy, not just U.S. economy, but the world economy. It does. It just doesn't like now is not the time to do it, right? Huge dose of hopium. Yeah, exactly. This is the first time in crypto history we have a declining money supply. A declining money supply. What do you mean by that? Hmm. What does this show exactly? The Federal Reserve. He means he means he was trading at leverage and his money is declining. It's the first time in crypto history I'm losing my fucking ass trading. Oh, the total amount of dollars in existence is declining. Right, right, right. Okay. What's this chart? It's only line with markers? Huh. What do you know what's causing that? This is definitely weird. Are we burning dollars? Are we rounding up pennies and melting them? Printing money would inject supply. Like here, for example, this is all the COVID stimulus. Something about the Fed balance sheet. Cool. Good enough for me. Money supply is weird. Like, how are they taking money out of circulation? What are they doing with it? You just have Joker from Batman just sitting there on a big wad of money, burning it all. Raining in the printing for the last 15 years. Yeah, but so you can reduce printing, but that doesn't mean the supply would go down. It would go flat, right? Like, for example, here. This is just crazy to look at when you take it off log. Like the Fed will buy our mortgage from the market, and when it is paid off, the buy there. Oh, okay, interesting. I see. Okay, interesting. Yeah, I've never looked at the market through that component lens before. They stopped buying with their fake money. Gotcha. Okay. So if we look at weekly QQQ, it's kind of setting up this like B bands M top. Look at this. If we get a weekly red close on Nasdaq, we'd be targeting this midline. Which is right in line with Dixie bouncing on support and Bitcoin pulling back too. S&P, however, looks better. It's through the cloud. Tenkan and Kijun are still inside the cloud, so it's not a trend just yet. We have the Kumo twist here. That's cool. I would just want to see this thing closing on this upper band here. We got everything else, right? We got the compression, got the expansion. Now we just need the attachment. And I mean, it's been slamming into this level for 6 times now, right? 1, 2, 3, 4, 5. I guess you could argue 6. How many times is this going to hold up before it breaks? And if this range breaks out, I think it's going to be pretty aggressive. I mean, it's been consolidating for a year and a half now. And if that happens, that'd be incredible. This looks like a bullish range to me. All right. Any other charts you guys want to look out before we call it here? Oh, we could look at GBTC. The weekly chart on GBTC. Oh, it actually did manage to close back inside the cloud. So it found support here, which is good. But currently shitting to the downside. I'll look at Coke. Let's look at Coke. A Coca-Cola. All reliable right here. With a massive head and shoulders bottom. Look at that fella. This is a dividend yielding stock too, right? What do you know what their dividend is? It was like 3.5%. Yeah. This is a good setup. I like this. And Coca-Cola just historically goes up forever, right? Gotta watch this weekly close. If it closes up here, that's a buy for me. I mean, technically it's already broken out. If we draw the neckline at an angle here, technically it's already broken out. I'm gonna look at UU. This thing isn't. You've asked me to look at UU so many times. It hasn't done a goddamn thing. It's literally been in the same small band of prices for like 2 months. Same thing. Head and shoulders top. Checkmate. GG. Target this impulse route. I know I asked. I'm just giving you a hard time. All right. SMCI. Hang Seng Index. All right. First, we'll look at this. Super Microcomputer. That sounds like a fake company. Super Microcomputer. That's not real. That's not a real company. I mean, this is bulls on parade here. Like, doesn't get much more bullish than this, right? Just giving it little love taps. Just tap it in. Just tap, tap, taparoo. Yeah, this is bulls. This is bullish as hell. I don't know what this company does, but it makes super microcomputers apparently. He builds servers. Okay. Well, their stock looks incredibly bullish. Well known in IT. Okay. We've also noticed gambling stocks look pretty bullish. BJK is an ETF for this. BJK. I mean, this just looks more like it's in a range. Honestly, I don't. Oh, okay. I guess these are actually really big swings. Oh shit. Okay, it's a big range. Yeah. I mean, it's currently working on a big old cloud breakout on the weekly. Um, daily is bullish as well. Yeah, it's currently working on a breakout, right? We see our compression, our expansion, and look for a daily close here. This could be a great long entry. Take a look at LVS. Oh, you asked me about this last time. Oh, wait, no, I was thinking of Louis Vuitton. What is this? Las Vegas Sands Corp? Literally looks the exact same. Just looks like the exact same chart. The fuck happened here? Oh, the housing crisis? Jesus, could you imagine buying that? What is the Hang Seng Index? Yeah, I mean, there's nothing really terribly special here. If anything, it looks bearish. Currently running into resistance here. Um, getting rejected at the monthly midline. Um, had multiple opportunities to break out through the cloud and failed. Look how clean this C clamp was. Look at that perfect touch. Yeah, this isn't something I would particularly be excited to hold. All right, any other ones? Whoa, what the fuck happened to Ethereum? Oh, Bitcoin made a new low. Oh, this is a 1 minute chart. Oops. This looks like a big old turd in the punch bowl. Look at that. Send it. I got short right on this 4 hour close. Somewhere in there. Saw the head. There's like, I mean, it's not hard to figure out where I'm positioned whenever I send out tweets. Like there's a big ass compression. There's a head fake, which I love head fake setups. Um, what can I say about Yumi? UEE. Oh, this is a coin. Um, is this it? What can I say about it? I say it looks like shit. What do you want to say about it? It's all down. Dude, some of these coins just like immediately lose money as soon as they open. Jesus. What is Yumi? Where does that even? Yeah, this looks like ass. Sorry, man. Looks like a big old poop. Nothing bullish about it. All right, guys. So we'll wrap it up here. If you want the notes that I have on the right here, go ahead and pop over there. If you're interested in joining my trading community where we actually discuss trades, or you're interested in doing a mentorship of some kind where we do one-on-one lessons, hit me up. There's an application in the free section of my Discord. And if you just want the notes, totally free. That's available there. I post replays, I post notes, I post all kinds of fun stuff in there. I mean, not really. That's just where I post that stuff. But it's fun to read, I guess. Anyway, I'll see you guys Wednesday. So Wednesday is actually the Market Power Hour. We'll be doing it over at Jack's stream. He will be hosting it at 2. It'll be a crisp 1-hour stream. And yeah, you guys be safe out there. And I'll see you on Wednesday. All right, bye.